Hello traders and welcome to the Trading Fanatic channel. It's Iliya here and I'm so excited to see you on my YouTube channel. In this video, I'm going to show you how you can manage your trades and more specifically how you can manage your winning trades, because if it's a loss, then you cannot manage it. You have to cut it, right? You have to have a stop loss, and if the stop loss gets hit, there is no need for management. But as you all know, we have three processes of a trade. Let's say the story of a trade has three parts. First of all, it's your entry, then it's the management part, and then it's the exit. And I can say that many people don't pay too much attention to the management part, because you have to know when to go break even, you have to know when to go half of your stop loss, when to manage your trade to profit, and how you can turn a day trade, for example, into swing trade. So as you know, as you're maybe aware from my weekly outlooks, or if you have taken my course, or you're just aware with the way I trade price action and more specifically market structure. So I follow how the market moves, and this really helps me to scale my trades and to manage them well. And in this video, I'm going to show you a few ways of how you can manage your trades if you are more specifically a swing trader, because me as a day trader, I look to close my day trades every day. So I don't leave them overnight, I don't leave them over the weekend. I have my trades sometimes I just spend 15 minutes into a trade, sometimes I spend hours, but I never leave my trade to run overnight, except if the trade is not creating, for example, a first lower high, something like this right here, and I expect that the market might create some moves to the downside. So in this video, I'm going to show you how to do it, and if you're excited about it, make sure to hit the subscribe button, turn on all the notification bells, and if you already did, let's get into it. Right, so the first management strategy I use is by understanding market structure and knowing how the market moves. All right, so as you all know, I always love to go to the charts and show you how it's done real time, not just giving you some lines as an example. So let's go to a random chart. Yeah, this is EU, that is actually fine. So I know it's much easier said than done, but this is how I do it. So let's take, for example, this massive move, because I was able to scale this to the downside, but I actually entered numerous trades on every lower high. However, what we spot right here is this upwards movement was finally broken. We had the first lower high just right here, then the market printed a lower low down here. So since that point, from this point on, I will be looking for shorts only. And if this whole move was like this, then we can expect the same to the downside, because this is how the market moves. It moves from zone to zone, and as we had some pretty high volatility there, I expected a pullback. So what did we have here was the price pulling to the downside and creating the first beautiful lower high. So you can have a trade right here 100%. What the market does later, if it pushes down, so basically with this candle or this candle here, I would have hit an TP for sure. Then the market pulls back again. What does it form? Another lower high. So if you hold your trade and your stop loss is, let's say you entered something like this right here, your stop loss is above the structure as always. And on this move to the downside, you had roughly around 1.54, you are still holding the trade. And what you do, how I manage my trades, is I don't allow price to break above this area. Because if this is your lower high, and if the market breaks above and closes above it, then you no longer have a downtrend. So the market pulled back to the entry, might have been stopped out, but if you look at this from a swing trading perspective, then you should not move your stop loss that early, because pay attention to the EMA as well. The market just broke the EMA, it's retesting the EMA, pushed down and came back exactly at the EMA to act as dynamic support and resistance. Then the market pushed very strongly to the downside to create a beautiful lower low. What we have later, guys, the next day, pullback. This is where I entered another short, because this is simply a lower high, and when I go to the lower time frames, it gives me an entry. What we had after this, a strong push to the downside to create a lower low, and actually came to the point where it filled that wick. So we can expect a pullback, because when the market creates a lower low, it will always pull back to the upside. So what happened on this occasion, if you're still sitting in this trade right here, I would trail my stop loss to break even. When the market pushes down and pulls back to this lower high, and after it forms the lower low, I will trail my stop loss something like this. So on this occasion, you might have been stopped out at some profit, because this usually doesn't happen often. This is a formation that I teach in the course as well, and you can trade this if you have a strong push into the highs right here, but the market immediately rejects. So this creates actually an equal lower high. Then what we have, the market pushes down to introduce the bearish momentum, pulls back, creates another lower high, and here is another beautiful short. Massive push to the downside, creating a lower low. While we have then a lower high. Another entry criteria, if you enter trade right here, and when this market creates a lower low, I'm moving my stop loss right here. Then price again, push down, pull back up, move your stop loss right here. After the market creates a lower low, pull back, potential lower high again, short opportunity, pushes down, fails to break. However, we secure that trade. And when you start seeing that the market is failing to break below, it's starting to show us some bullish pressure right here. You can see turned into a little bit of a consolidation. I would close the trade somewhere around here, because the market cannot continue to push for forever. This was a massive trade as well from a swing trading perspective. And if you even manage to get on the lower time frames, that is absolutely beautiful. Okay, so another management strategy for you can be the Elliot wave theory. And to be honest, I really don't know how to trade this. However, as I've learned that the market tends to move in 5 waves before reversing. So if you have a look at EU, actually those 2 price cycles right here were picture perfect. So let's have a look. If we start at the top, price prints a low, lower high, lower low, lower high, and a beautiful lower low. So we have 1, 2, 3, 4, 5 waves before the market does the ABC, which I don't know how exactly works. But what I spot on this market is that we have a lower high, the market fails to make, turns into consolidation, and we have a strong breakout to the upside. And after this breakout, I consider buys only if I don't want to trade a retracement to the downside. Then what we have, guys, is a strong push, pullback, beautiful higher low right here, a strong push, a pullback, higher low, and a strong push. And if we count the waves, 1, 2, 3, 4, 5. And what happens after the 5th wave? We violated this trend line, and this was actually yesterday night. We perfectly retested it at the EMA, break of the EMA, pullback, trend reversal, and we had a continuation to the downside, which currently is consolidating a little bit, but it is what it is. So this is how we spot. This is how we can manage our swing trades, because we cannot expect the market like this. This whole move was due to the corona. Like, there was a lot of volatility, and the market just moves like this. If you go somewhere else, sometimes the legs might not be that clean, but you just have to spot them to try to find the clearest one. So we have an impulsive move to the upside. This is the clear pullback. We have an impulsive move to the upside where it created a higher high. This is the pullback, and we have an impulsive move to the upside where it created the higher high, right? So we have 1, 2, 3, 4, 5. Then the market pushes down, pulls back to create a lower high, and this is when we start pumping to the downside, right? And what do we have again? 1, 2, 3, kind of 4, yes, here, and we can say that this is our 5th. The market turns into consolidation again, and we have explosion to the upside. So this is another thing that you can use to manage your swing trades, and right now I'm gonna show you how I manage my day trades. All right, so let's have a look at 2 trades I took today, USD Swiss franc and USD JPY. So those trades are not too much in alignment with the 4-hourly time frame, which is my main one, but they're more taken from my understanding of how the market moves. So I'm gonna show you right now. Even if we have a look at this example right here, guys, what we can see: push, pullback, push, pullback, push. 1, 2, 3, 4, 5. What do we expect after the 5th? A potential reversal. And this is actually what happened. So we had a strong move to the upside, but this was news. So we have here bullish bearish formation, which is actually, yeah, it's just manipulation and news. But what I saw today is that the market pushed up and started to reject. So I said, okay, what I want to see on this market is for it to pull back to create a higher low in order for me then to go long on it. So I said, let's trade then the pullback. And what I saw on the hourly is that the market just created this high right here, so I expected a pullback, right? And my entry time frame, the 5-minute, I saw this massive push to the upside, and I basically traded the momentum down. This was my entry right here. And so how I manage this trade, my trades usually have 3 criteria, like 3 levels, I would say, or 3 management levels. Yes, the first one is stop loss to half when I want to minimize my risk as much as possible. The second one is break even, where I'm kind of eliminating any risk from the trade. And the third one is managing the trade on profits. So how I manage this trade: after my entry right here, the price massively pushed to the downside. And at this point, I moved my stop loss to half. Then the market created a lower high. So at this point, I'm just looking at the market, and potentially if it really starts to push up, I might close break even. But I saw this strong bullish candle here. So I said, okay, there is still some space, and then a massive bearish engulf, and then a continuation of the bearish engulf. So at this point, I was stop loss to break even, and I even put it something like this on little profit to cover my commissions. Then the market strongly pushed to the downside, gave us a little bit of a rejection as well, and I took my profits right here, 85% of my profits, and I left the runner to run with my stop loss above those wicks. So I basically do the same thing, but on the 5 minute, and the 5 minute structure moves the same. You can find the same waves, you can find the same things over and over again. You just have to understand how it moves. And then the remaining of my position got stopped out at something like 2.5 hour, but it was a very little position, so it really doesn't matter. I just let it go, maybe with targets the higher low that I expected. Okay, I hope that's clear. And if I have a look at my other trade, which is USD/JPY, which is going actually pretty good, and I still have it. So what I spotted right here, guys, is again, if we try to find the moves 1, 2, 3, 4, 5, potentially massive reversal to the upside, price pulls back to form a higher low, and then we strongly push to the upside to form a higher high. What do we expect after a higher high? We expect a pullback. So I said to myself, well, let's trade the pullback. I identified here that the market was too high, it was too overextended, and when I go here, I spot my entry, which was right here. So what the market did, again, first level, I want to minimize my risk. When the market pushed down there, I minimized my risk at half stop loss. When the market continued to the downside, I was still thinking of it, but I kept watching the trade. And this was my heart beating moment when the market was so close to break even, close with a wick. And I said, okay, let's have a look. If it starts to push into my stop loss area right here, I would just close the trade. But then it printed a strong bearish engulf and a continuation. And then I went break even, and I just took my profits because I was too panicked about this trade, and I just decided to take my profits. But how I would have managed this trade, if this is my last lower high, price pushed down, pulled back a little bit, so maybe I would have taken partials, 85%, and left the runner to run. The market failed to break below. As you can see, again, structure, price pushed down, lower low, lower high, failure to make a new lower low, pull back for a lower high, again failure, which makes a higher low of the previous structure right here, and we have a higher high. And on the higher high, I would have been stopped out. Then the market pushed again to form a double top, and right now it's reversing again. Do I care? No. So this is how I manage my trades on the lower time frames as well. I can do it on the hourly. If you enter on the hourly, for example, you can again spot all those structural points, and you can trio your stop loss to them. All right, as a final recap, what we can use to manage our trades is simply market structure or the Elliott wave theory. So if you're interested about it, I might make a video explaining more details, so let me know about this. And there are a lot of books about Elliott wave. I'm sure you can find something of it. And about your entries, if you are a day trader or you want to become a day trader, you have to protect your capital at all costs. So when you enter your trade, you immediately have to think when you can go and secure your profits or to secure your potential loss. So first of all, you have to go stop loss to half to minimize the potential risks. Then you have to go stop loss to break even to remove the risk. And then you have to start eating from your position. Okay, if the market starts to flush to the downside, you move your stop loss to profit and you take your partials and you leave a runner. This is what I do, and I really hope you appreciate that I share this with you. So let me know down in the comments if you like it. Let me know if you want me to make more videos of this. I would really appreciate your feedback. And that's from me. I just want to again say that this video is sponsored by Crypto Rocket. It's an amazing broker that I use for crypto and for Forex as well. The spread is very low and the withdrawals are super fast. So make sure to check it out. The link will be down in the comment section below. And again, if you like this video, make sure to hit the like button, subscribe, and I cannot wait to see you on my next video. Thank you.